Welcome to the Advanced Guide to Fidelity ETFs, a comprehensive tutorial designed to help you navigate the world of exchange-traded funds with confidence. Fidelity ETFs are a popular investment option, offering diversification, flexibility, and cost-effectiveness. In this guide, we will walk you through the key concepts, practical examples, and best practices to get the most out of your Fidelity ETF investments. First, let's start with the basics. ETFs or exchange-traded funds are a type of investment fund that trades on a stock exchange. Like individual stocks, Fidelity ETFs are offered by Fidelity Investments, a well-established financial services company. These funds track a specific index, sector, or asset class, providing broad diversification and instant access to various markets. To get started with Fidelity ETFs, you need to understand the different types of ETFs available. Fidelity offers a wide range of ETFs, including index ETFs, sector ETFs, bond ETFs, and commodity ETFs. Index ETFs track a specific market index, such as the S&P 500, while sector ETFs focus on a particular industry or sector. Bond ETFs invest in fixed income securities, and commodity ETFs track the price of commodities like gold or oil. When selecting Fidelity ETFs, it's essential to consider your investment goals, risk tolerance, and time horizon. You should also evaluate the fund's expenses, trading volume, and tracking error. Expenses refer to the management fees and other costs associated with the fund, while trading volume affects the fund's liquidity. Tracking error measures how closely the fund's performance matches the underlying index. In terms of practical examples, let's consider a few scenarios. Suppose you're a long-term investor seeking broad diversification. You could invest in a Fidelity Index ETF that tracks the total U.S. stock market. Alternatively, if you're looking to capitalize on a specific trend, you could invest in a sector ETF that focuses on a growth area like technology or healthcare. To maximize your returns and minimize your risks, it's crucial to follow best practices when investing in Fidelity ETFs. Start by developing a well-diversified portfolio that spreads your investments across different asset classes and sectors. You should also regularly review and rebalance your portfolio to ensure it remains aligned with your investment objectives. In conclusion, Fidelity ETFs offer a powerful tool for investors seeking to build a diversified portfolio. By understanding the different types of ETFs, evaluating key factors, and following best practices, you can unlock the full potential of these investment vehicles. Remember to stay informed, stay disciplined, and always prioritize your long-term investment goals. With this advanced guide to Fidelity ETFs, you're now equipped to make informed decisions and navigate the world of ETF investing with confidence.